It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
Hey, welcome back to the Real Estate Breakfast as we follow the Australian property market. You know, sometimes it almost feels like we are stalking the real estate market. Another weekend is up and approaching. We've got inspections, auctions, open homes, and maybe you're trying to work out some housing values in your market that just keeps on moving further away from you. If there's something happening too in your space or a property issue that you think that we should be talking about, get in touch. You know, the podcast continues to grow because of the audience behind it, the shared stories, the opinions and the experiences from listeners right around the country, including, yes, I'm not forgetting you expats that are dotted around the globe. You can send us that voice message with the link below, or you can email us anytime, myrealestatepodcast@gmail.com. Well, it's a Friday. Yes, May the 8th, and all this week there's been a lot to take in. You know, more money going out the door essentially every week, whether it's petrol, groceries, utilities, mortgages, of course, gone up, and we'll be talking about that in just a moment. Then you've got the rent to pay if you don't own a home. It's exhausting, it's challenging at the same time, no argument from me. But yesterday, I've got to tell you this story. A friend of mine, when I was having lunch, said, imagine if we got COVID 2.0 right now. I said, oh, shut up and enjoy your lunch. You know, don't kill the mood for some relaxation. But it's a point, I suppose. You know, imagine something else turning up. Let's go to Brisbane right now and catch up with Sarah Megginson from Finder. Yes, we don't want COVID 2.0 turning up, especially when I'm having lunch, you know.
Absolutely. That is not the right lunchtime topic, but I'm actually surprised that you were able to talk about anything other than the RBA increasing rates, because that seems to be the main topic of conversation this week.
Yeah, but, you know, I'm talking real estate all day, every day, so it's very easy for me to just turn off from real estate. People that know me know that I'm not a real estate agent. Yes, real estate investing, done that over 30 years, but not in the space of a real estate agent. But anyway, let's talk, yes, about this week, because mortgage stress, it is returning across Australia. We have the return of mortgage stress as saving buffers disappear. And I know that this is a space that you guys like to cover at Finder.
Yeah, that's exactly right. We are always looking at the impact this has on Australians, whether you're an investor or a homeowner or a renter, wherever you sit in the market. We're always interested to see how the latest financial changes and the economy impacts you. And what we know at the moment, we have this Finder's cost of living pressure gauge. And at the moment, it's sitting at 76%, which is in the extreme pressure range. So we know Australians are under a lot of pressure. And it's been there, it's been quite high since January. And of course, since January, we've had 3 interest rate rises. So this is the most stressed that people have been about their finances in quite a while. And 54% of mortgage holders specifically say they are experiencing mortgage stress. So that's quite a significant amount. You know, over half of people with a mortgage are under stress financially. It does not feel like the ideal time for another interest rate increase to be flowing through, but it is the situation we find ourselves in. So it's something that we need to figure out how to avoid getting into actual arrears and financial distress while we're managing these increases.
I think you guys have been talking about the second phase of financial pressure for the Australian borrowers. This weekend, can you imagine everybody that has got a mortgage that has some sort of pain, and I would say it's right across the board. They're going to be sitting down. They were doing it on Tuesday when the announcement was made, but this weekend brings everybody together. How do we save more money on money that we've already saved? So that second phase of pressure is really biting, isn't it?
Absolutely. And I think you raised such a good point there that, sitting down and looking at the information and the data is the best thing you can do, because it's obviously stressful to get an increase to your mortgage interest rate, but it might not be as stressful as you think. And what I mean by that is I have a big mortgage on my house. When I got the news, what I thought in my head that my increase was going to be was actually a lot higher than what the increase was. So I think the first thing anyone should be doing is looking at your actual situation, seeing what that increase is, so that you're not worrying about what it might be, you're worrying about what it actually is. And once you know what it is, that's really good data to work with. And say you've sat down and looked at your mortgage and realized that your payment is going up $150 a month, which is a very stressful amount over 12 months. That's $1,800. Well, then your next step is to look at, how do I replace that somewhere else? How do I save money somewhere else to cancel out this increase? And for some Australians, that will be as easy as calling your bank, because some banks at the moment are offering discounts of up to 0.2% or 20 basis points, which almost wipes out this increase. Some of them are offering cashbacks if you stay with them, and other banks are offering cashbacks if you refinance to them. It's really the best time to be shopping around and looking at what you're paying, seeing what offers are out there to see if you can claw this money back some other way.
Yeah, I'm a big fan of refinancing. So many people still don't do it, and you've got to do it. You've got to save on the money, because we are being belted around at the moment when it comes to all the expenses going out of that household. As I mentioned, people will be this weekend sitting down talking about their finances. There will be some, unfortunately, that will say, we've got to sell our property. We cannot hold on any longer. Renting versus owning has become this big debate. The widening gap between mortgage repayments and rents, particularly in cities like Sydney, they are there to see. And are we seeing a psychological shift where younger Australians are becoming more accepting of long-term renting? It's that mindset that is baked into the brain.
Oh, absolutely. I think buying property in Australia is culturally, it's a rite of passage, and it's almost an expectation that you're going to be a homeowner. And that is quite unique to Australia. In other countries, it's not quite as assumed. In many European countries, home ownership is not something that is expected of young people. I'm not saying that to say that we should adjust our expectations. I think it's very normal and a great, goal to have, to want to buy property. But I do think that it's shifting in Australia in a way that we've never seen it shift before, because the difference between what we earn and what properties cost at the moment has just grown so wide. And I don't know what it would take to be able to bring that gap, close that gap a little bit, to make it more affordable and achievable for young Australians. I do remember, this feels like a new issue, but it has been bubbling for a long time. And I do remember probably 15 years ago, it was around 2010, it was after the GFC, and I remember reading some research and some modelling that said Sydney in particular was on track to become a city like New York City that would have a majority of renters and a minority of owners, simply because it's such a landlocked city. There's nowhere to grow except for west, and people traditionally, they want to live closer to the ocean in Australia. So when you look at those fundamentals, you have to build up. Looking ahead, they said, I think we're going to we're going to end up more like New York than we ever have before. And they were predicting rental ownership, that ratio, to be hitting kind of similar to New York, which is around 60% renting, 40% owners. And at the time, and across Australia, our ratio is almost the opposite. We sit at around 32% renters and close to 70% ownership.
We are talking with Sarah on our Friday. When we come back, affordability is reshaping the housing market. We'll look at that next.
Every morning from 6 a.m, we bring you the latest real estate news with diverse perspectives from leading industry experts. We deliver the most property podcasts across Australia every week. Eager to expand your property expertise? Enhance your real estate know-how with us.
Hey, we're going to have a look at a spotlight on Canberra real estate because before COVID-19, Canberra experienced two major property growth cycles that shaped the market. Can you remember the first? Well, the first was during the early to mid-2000s mining and government expansion era. This was when public sector employment and rising incomes drove strong housing demand in Canberra. The second, that came between 2013 and 2017. This is much more recent, supported by low interest rates. Yes, infrastructural spending as well and tight rental supply. Canberra has historically, of course, been heavily linked to government employment stability, which often insulated the market during weaker national cycles, a type of insurance, if you like, for the market of Canberra. And it is a Friday morning. Sarah is with us here talking about the changing conditions across this week, the changing conditions over the last few years, but 2026, much different year to last year. Affordability, that is reshaping the housing market. Research continues to show that affordability pressures are pushing buyers towards smaller homes, smaller units, outer suburbs and alternative housing models. And it was only this week that we were talking about those smaller spaces. We were talking to Ian about these homes that he's converting, 4 or 5 bedrooms, turning every bedroom into an ensuite. It's got all of it set up except the kitchen. And yeah, people are getting into these for $350 a week. So Sarah, Australians, they do need to become more financially creative, don't they? And is affordability now permanently changing, do you think, the traditional Australian housing dream? What do you think?
I think it's such a good question because I have been in this space. I started out as a financial journalist just before the GFC, which was almost 20 years ago. And back then, the main headline dominating news was how unaffordable housing was in Australia. So I think it has always been a narrative that it is hard for first-timers to get onto the property market. Well, certainly for the last few decades. But I think the conversation has fundamentally shifted now because back then it was unaffordable for first home buyers to live where they wanted to live. Now it has become unaffordable for first home buyers to buy anything, even if it's, much further away from their place of employment or their social networks or the city where they want to live. Even those more affordable regional options are becoming unaffordable. So I do think that has been quite a big shift and I don't see it turning around anytime soon. But I think the other thing that we need to consider is the fact that affordability also means your ability to get a loan. And with all of these rate increases, borrowing power is also impacted. I'm actually right now in the process of refinancing and my broker called me yesterday to update me after these 3 increases that we've had. Our borrowing power has dropped by $100,000. It's not just the fact that it's becoming more expensive to buy property. It's the fact that what you can afford to borrow is dropping every time we have one of these increases. It's also tough for anyone that has a mortgage. It's just a tricky time all around.
Yeah, and put your feet up this weekend. Not only you, Sarah, but anybody listening with some of those stresses, and that is most people, unfortunately. All right, we'll wrap it up there. Enjoy the weekend coming up. Thanks so much for coming back onto the Real Estate Breakfast, and enjoy your Friday out there.
Thank you so much.
Every morning from 6 a.m. across Australia, we deliver you the latest property news, commentary and predictions from Perth to Cairns and from Melbourne to Brisbane, 7 days a week. We connect you to the best real estate information across Australia. The Real Estate Podcast.